Hey guys, how's it going? Sean back here with Everything REI, and today I'm going to give you the July Bay Area market update. Coming right up. Hey guys, how's it going? My name is Sean, and I'm a real estate investor here in the Bay Area. And on this channel, we go over real estate investing tips, strategies, and current events to help you learn more about the business and to help you become a real estate investing boss. So today we're going to go over the Bay Area real estate market update. This is provided by Aculist, and actually this data was given to me by one of our meetup event attendees. So thank you so much, Dana, for sending this to our group. If you guys are interested in learning more about real estate, be sure to check out our meetup group down at meetup.com/everythingrei. So without further ado, let's hop into the numbers themselves. So here I have two sheets from Aculist. Aculist is an MLS listing company that provides data for agents to be able to show to their clients how the trends are going. And usually I do these trends once a month and I go to their daily status. But for the past couple of weeks, they actually haven't updated their daily stats list. So luckily, they created their own presentation and were kind enough to give us this PDF form. So let's go through Santa Clara and San Mateo counties. Okay, so we can see here for Santa Clara County, the June sale volume since 2015 has gone down quite a bit since our peak of, let's say, 2017 and 2018. But this is just how much they have actually sold in this year so far. So, a couple $1 billion. And now let's talk about the median sale price. So median sale price looks like it has increased a little bit from our low, but it's still not as high as our peak back in February of this year. So in February, we were selling at $1.4 million. Now we're at 1.381 million. Not too bad. Shelter in place, we saw some prices go down, and now it's kind of gone back up a little bit. So for June close sales, it looks like we're a little bit lower than we were last year. New listings have ticked up a little bit from our past month as well. And you can see here, this was January, February, and then boom, during shelter in place, we lost a lot. So the sale to list price ratio is a pretty interesting metric. As you can see here in March, homes were selling at 106%, which means that if a property was listed for $1 million, then it would probably sell for $1,060,000. And the thing is, I was talking to some real estate agents yesterday at our meetup group, and they were saying that, yeah, even though the sale to list price ratio is kind of low, it's like in the 100 or the 100.5% range, it doesn't really mean much because this is just the way that people market their properties. Sometimes people market it really low and then it sells for 200 or 300K higher. Like you can list a property for $1, but you'll know it's going to sell for $1.3 million. It's just a marketing tactic and it's not a really, really big deal. What's more interesting to see is what is the median price over time? Are you breaking records with your offers? How many offers are there? And how fast are homes selling? Like what is the DOM? So let's look at increased median price. It seems like for Santa Clara County, San Martin has increased their median price by 46%, which is freaking nuts. Gilroy has also increased their price by 15% since last year. Montecito, Sunnyvale, 8%, Morgan Hill at 7%, Los Altos at 6%, and San Jose at 5%. Santa Clara itself is only at 0%, so it stayed flat since last year. And this kind of makes sense. Like, Gilroy, Morgan Hill, these are a little bit out of the way. And for people who don't want to live in, a small city and pay exorbitant rents, you can buy good houses in Gilroy and Morgan Hill for a fraction of the cost of a house in San Francisco, and still maintain a similar quality of life. Like if you don't have to be in the office every single day, does it really matter if you live 2 hours away? Probably not. And even if you have to go to the office maybe once or twice a week in the future, traffic probably won't be as bad as it was earlier this year. So that's why we're seeing a lot of volume in Gilroy and Morgan Hill. Now let's look at the places that lost the most money. Los Altos Hills lost 12%. Mountain View. Milpitas, oh no. Surprisingly, Milpitas lost 9% as well. Cupertino 9%, Stanford, Los Gatos, Palo Alto. So all these places besides Milpitas are in the upper echelon of price points. And again, this kind of goes back to what I was saying before. People don't really need to live in a super nice bougie place in Los Altos Hills. You can get an equivalent home in the suburbs for 1/4 of that price. And since you're at home all day anyways, then does it really matter how close you are to any of the bougie country clubs in Los Altos? Probably not. So maybe that's why it's losing some price. I'm surprised that Milpitas has actually dropped in price because Milpitas seems like a great area. I don't know. I'm biased because I live here. Stanford, Los Gatos, yeah, they dropped a little bit in price too. Overall, not too bad. I am surprised that Mountain View lost a lot because Mountain View is actually a pretty nice area. So that was year over year. Now we're going into month over month changes. So from June to July. Things like Saratoga has increased in price. Los Gatos, Los Altos, Morgan Hill, the very bottom is Gilroy. Gilroy has stayed steady. Okay, moving on. It seems like Milpitas is the one that took the biggest hit. It took 10% haircut from June to July. And Campbell took 17% hit from 1.697 to 1.415. Increased median prices for condos and townhomes. You're going to see Saratoga at 22%, Los Altos at 11%. Increased closed sales. So, like I said, a lot of people are buying in Gilroy right now. We are seeing activity in these different cities. Stanford only has one sale, which is pretty interesting. And maybe that's because they're limited in the amount of properties they're allowed to sell in Stanford itself. Like maybe it's only for professors who can buy and sell in this area. So decreased closed sales, minus 50%, but if you go from 3 to 2, that's not a very accurate measurement of the success of that area. Sunnyvale has decreased in the number of listings and closed sales in the past year. Same with Saratoga and San Jose. But we are seeing a lot of activity in Morgan Hill. We're seeing activity in Los Altos and Palo Alto. So new listings are coming up: Montecito, Palo Alto, and Los Altos Hills, Sunnyvale, Mountain View, Saratoga, and Cupertino. So decreased new listings. To be honest, I actually like this. I feel like if you have fewer listings, then that means that there's more demand for those areas. So to see that last year we had 77 listings in Santa Clara, now we only have 50, it makes me very hopeful because I'm actually putting my own property in Santa Clara on the market in the very near future. Not a lot of homes are selling in Milpitas as well. We're down 48%. Morgan Hill is down 38%, but like I said, that combined with the demand in those areas, it makes the prices increase. So if you own property in Morgan Hill or Gilroy, it's a great time to sell. So we're seeing some new listings in Los Altos Hills and Mountain View and Sunnyvale. As the listings increase, then the price will probably go down a little bit. But these are month-over-month changes. And here are the increased new listings for condos and townhomes. We're seeing a lot in Milpitas. I mean, there's a lot of new construction in Milpitas, so I'm not surprised by this number. Okay, so decreased days on market. This is nuts. Cupertino is at 6 days on market. That means that within 1 week, a home is on the market and is either pending or contingent within 6 days. Expensive houses in Los Altos Hills only have a 10 average days on market. Crazy. So we are seeing a very strong competitive market. And just for anyone who doesn't live in the Bay Area, as an example, in Jacksonville, Florida, you're going to see days on market average around 90 to 120 days. To go from 2 weeks to 120 days is a huge drastic difference. And we are clearly still in a seller's market, even amidst our coronavirus pandemic. So here's the decreased days on market. Stanford went from 60 days to average of 16. These numbers are very strange. Cupertino from 22 to 12. Montecito from 75 to 44. Sunnyvale from 27 to 18. So basically this means that properties are selling very fast now. Santa Clara County increased sale to list price ratio. Okay, so these numbers aren't really that spectacular, maybe increasing by like 1% or 0%. So it seems like the listing strategy right now, it's to list it where you think it's going to sell, and don't try to expect $100,000 or $200,000 above your listing price. We're not in this environment anymore. So here we go, increased sales list price ratio. It seems that if you list in Los Altos Hills, you can expect a small haircut. Milpitas increased a little bit. Mountain View, yeah. So basically, the sales to list price ratio has been relatively the same, and it seems like if you try to sell your homes in, let's say, Stanford, you can expect a 10% cut on what you put. Otherwise, it's going to be very similar to what you list. Okay, so that was that for Santa Clara County. Let's take a quick look at San Mateo County, and we're going to go over this really quickly because I personally don't care that much about San Mateo right now. So San Mateo County median sale price has gone up from last month from 1.65 to 1.73. So that's a very healthy trend. Closed sales are a little bit lower than we had last year. New listings have increased significantly. Sale to list price ratio still near 100%. So your increased median price is, Woodside up 20% from last year. This surprised me a lot. Atherton's median sale price is now at $6.52 million, which was 22% higher than the $5.3 million than it was last year. I didn't know Atherton had 22% higher to go, but there are still some ballers out there who can afford a $6.52 million house. No big deal. In fact, I was talking to a contractor who does new construction in Atherton and sells their properties for about $14 million. There's a lot of spread there. Belmont has also increased significantly from last year. We have Burlingame, Menlo Park, Mowbray. My friends all live here, so I'm kind of jealous of where they're at. Pacifica has increased almost 10% from last year as well. So where have we seen decreases? La Honda decreased almost 50%. East Palo Alto down 24%. And this is pretty sad because I remember there are a lot of investors who invested in East Palo Alto maybe 2 years ago. So I wonder how they're doing now. Redwood Shores have decreased 20%. Same with Portola Valley, 15%. And Daly City and San Carlos. I'm surprised San Carlos dropped by 10%, but I think a lot of new constructions are having a hard time selling, and that's why we're seeing these numbers drop a little bit. All right, so let's look at where we have increased prices from month over month. Looks like Brisbane has increased a lot. In fact, I didn't even know Brisbane was a city until my friend Jenny Locke, shout outs to you, bought a home in Brisbane for around $2 million. So maybe this is her number right here. Half Moon Bay has increased a lot. South San Francisco also increased a lot too. Here are some of the losses month over month. You know, and when you see numbers like this from 2.265 million and last month they're at 5 million, I'm pretty sure that just means that only a few properties were sold last month and they're all in the, top of the market. And now we're selling some of the medium homes and we're not selling these expensive like 10 or $20 million luxury homes. Like same with Atherton. See, like last month, the median was 11 million. Now it's at 6 million. It just means that the super bougie $20, $50 million homes in Atherton didn't sell this month, but they sold last month. Median price for condos and townhomes, East Palo Alto has increased a lot. Same with Menlo Park. All right, let's look at the closed sales here. These numbers honestly are too small. It's like your statistics classes, where if you have a small sample, then any one number will make it, 25%, 30% larger. So just look at them, but don't take too much into consideration. All right, here we go. Decrease closed sales, increase closed sales. So I want to skip to the juicy stuff, but I'll go over this slowly so you guys can view it on your own time. Interesting. So we have 23 new listings in Hillsborough and 17 new listings in Atherton. So let's see, increased days on market. Seems like Woodside's having a hard time right now. Properties are just sitting on the market and not selling. Same with La Honda and same with Millbury. But let's talk about the juicy decreased days on market. Someone has $6 million for Atherton homes and only have 9 days on market to make the decision and buy the property. Same with Menlo Park, same with San Carlos, down 50%. These are surprising when you see, homes in expensive areas and their days on market are, under 2 weeks. So that's a good sign for sellers and a very bad sign for buyers. Increased sale to list price ratio. Again, these numbers aren't too significant. Let's see, decreased sale to list price ratio. So San Bruno isn't as poppin' as it was before. But again, it seems like across the entire market, they're around 100%. So you are going to get what you pay for, but you're not going to see the crazy, 13% over list like you were a couple years ago. So finally, we have this last slide of increased sell to list price ratio. Atherton's now 99%. So if you list it for 7 million, we'll probably sell for 7 million. And same for everywhere else in the peninsula. So I hope you guys all enjoyed this video. I know this was maybe kind of boring today because we didn't have these wonderful charts that we usually do. But I hope this gave you a good sense of the real estate market so far. From my conversations with other agents and by looking at the data myself, it seems that the strategy now is to list it at the price you expect to sell it for. So don't just list it really low and expect to get crazy offers. You might limit yourself and people might think your house is too cheap. And then if you can't sell in 1 or 2 weeks, then everyone's gonna wonder what's wrong with the home and you have to drop the price even further. So just set it at what you think you're gonna sell it for and then just hope for some good offers. Again, it seems like the real estate market is still very strong here in the Bay Area. We don't know how much longer this will last. I made a video really recently about how some stimulus checks are going to stop coming for people who are unemployed, and that could affect the economy as a whole. The elections are coming up very soon as well. So right now, the government officials are doing their best to satisfy the citizens so that we vote for them again in the November elections. But what happens after that? Maybe we won't see the ripple effects of this whole shelter-in-place coronavirus pandemic until early 2021. So right now could actually be a great time to sell if you're a home seller. We don't know what the future is going to be like in a couple months. Of course, the economy could recover. We might have some crazy vaccine and then everything will double. So it is always a guessing game. No one has the answers, but just based on the data, right now, it is a very good market. It is a good time to sell your home if you're thinking of selling. If you're buying a home, it is very competitive right now. People are still paying high prices for these homes. But because the interest rates are so low, they're able to afford it. So it could be a good time to buy a home, hold on to it. And if you expect to hold on to it for 10, 20 years, then the fluctuations of price today really don't matter that much. But being able to be locked in at a very, very low interest rate probably matters more. So if you guys are interested in buying or selling real estate, feel free to contact me. You can schedule a call with me with the link down in the description below. And let me know your thoughts about the Bay Area market. Do you think these numbers signify that we're going to have a healthy real estate market going forward, or are we going to crash anytime soon? Let me know down in the comment section below. If you guys enjoyed this video, be sure to smash that like button, subscribe to the channel, and hit the bell notification to see more videos just like this one. Thanks for watching, guys, and I'll see you next time. Take care.